Hey, good morning, everyone. Happy Wednesday. It's 7:40 a.m. here on the U.S. East Coast. Let's get this analysis going. Let me first get this link out to everyone. All right. So, how are y'all doing this morning? It's a beautiful day. Okay, so let me get this pushed out here first. So this is our Cryptosomnia community. This is where all the magic happens, guys. If you're not part of it, if you're not in our free lounge and you haven't quite experienced a good community that likes to provide good content and good analysis, definitely come join. There's a lot to talk about today. Specifically the price action, the choppy price action that we've been seeing for the last, 3 to 4 days now, I would say, maybe even longer. I'm trying to think exactly when we dropped off from 9,000, and we've been in this 7,600, 7,900 choppy area. So once I get these posted up, I'll go through the analysis. Give me your thoughts on where you think Bitcoin is going till then. Let me know what questions you have, and I'll get to those shortly. All right. Just give me a second. And also, guys, if you want to give us a like or a thumbs up, it really helps with the YouTube algorithm to boost our page. So if you just give us a second to help me, spread the word that I'm going live. In the meanwhile, you can give us a thumbs up, leave me a comment of where you think price action is taking us, and I would love to hear exactly your thoughts. All right. Let me share in these communities right here. Awesome. Okay. So now that we're done with that, let's open up a fresh chart over here. And first thing I want to show you guys is all we've really done over the past, since over here, right? June 3rd, and today is June 12th. So for the last 9 days, actually. Okay, all we're really doing is moving sideways in this big trading range between 8,020 and about, let's just say 7,600 or so. Okay, that's really all we've done. Now one could say that this is, definitely distribution, and I would tend to agree with that because price is just not escaping this area. Usually you get sales filled in tops like this. You get a sell order filled, and you get your short position filled right there, and right there. And when the sell orders are all filled, and the shorts are filled, then you sort of dump the market, okay? And dumping the market will probably take prices down to, some previous levels that we've spoken about, around 7,200 to 6,900. That's really my next target, probably where, BTC could head down to if the 7,600 area does not hold, okay? I really don't see anything else in the way till then. But let me see if I can show you a cleaner chart of exactly how that looks. This is kind of what we're doing, okay? Here's in the blue, this is the big trading range, okay, that we're currently in. As you can see, we've tapped, the bottom of this trading range, which is about 7,450 or so, and the top, which is about 8,050, okay? Anything in this is just chop. Okay, you'll definitely get chopped to shit if you try to trade this. Best to get out. In our community, we've been essentially in all cash, as you can see. Open positions right here, cash 100%. We closed these positions at a loss, but we also opened up some small ones in Litecoin and another asset, which I'll talk about briefly in a little bit, okay? But for now, what you can really see is there was this momentum going on right here when we touched the first bottom at 7,400 or so. we reached over here and we tried climbing in this ascending parallel channel. Lasted maybe 3 or 4 days and then came down in this descending parallel channel. Okay, now even then we've sort of broken out of that, and now what it seems like we're doing is, you know, this kind of thing right here. Okay, this to me looks like a bit of a rising wedge. All right, let's say something, actually it's maybe more of a ascending triangle. I don't know about a rising wedge, it's hard to fit in a rising wedge, but it's more of an ascending triangle right here. In this case, ascending triangles, again, because this is so much choppiness, it's probably going to lead to more choppiness. Remember that, you know, most triangles, depending on where price comes into the triangle from the bottom of the top, like see right here, you can see that we created a pennant or a symmetrical triangle, and this broke to the upside. Okay, oftentimes most triangles follow the prevailing momentum that, you know, leads into the triangle. So in this case, because this is more chop, I wouldn't be surprised if we get more chop and you drop out of this and go back to the EQ of this channel, which is around 7,700 or so. Okay, the true break, guys, that you're really looking for is 8,050. Okay, if you see 4-hour or 6-hour candles close above here, then it's a positive sign. Look at this right now. As you can see, every single candle, we're on the 4-hour chart, every single candle has wicked up into it. All these are traps and then comes back down. Okay, you can see right here, wick, trap, back down, wick, trap, back down. Okay, wick, trap, somewhat, you know, sideways movement, but I wouldn't be surprised if we come back down. But again, you have to wait for the confirmation break of 8,050, or if you want to be truly safe, you want to wait for the confirmation break of $8,300 or $8,350 to be safe. Why? Because we've touched this multiple times, right? This was resistance, 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 key support, support, and then break right through, right? And now we haven't even come back towards that resistance. Okay, if we do come back to that resistance and we cannot break through, all right, I would probably say that we need to at least come back and tap this level of support, which is 8,050, and then head back up. Okay, if that does not happen, okay, and this was truly, you know, say we break up from here and we break towards 8,350, and then we break down below this level, and this was all a bull trap, and this is all distribution. Okay, distribution looks like this. Okay, on a larger time scale, I did this chart on May 26th. This is the larger time frames of how distribution has been looking. You can see that for the most part, it's been playing out quite well. Okay, you have to understand why distribution looks a certain way, why prices, you know, look weaker on the way up, and then they essentially move sideways and then slowly just deplete into last point of supports, last point of supplies, and then show of weakness, and then just dump off. Okay, you have to understand why they do that. If you want, you can go read this whole post right here. It'll take you like 10 minutes, but it's a very informative post, and it'll help you understand exactly how markets function, especially when there's larger players pushing the market around to be able to fill, you know, big bags of buy or sell orders. Okay, and it's not just large players, guys. You know, this is really schematics like this are a way of understanding how human psychology is at work in certain price ranges, whether price moves up or down. You know, when you have this upthrust after distribution test, why exactly does that happen? This is usually this area right here. I can guarantee you right here is the psychological basis of FOMO, because people think that, okay, well, price already hit 8,800. Now I'm getting, you know, a discount right here at 7,900. So let me just buy this, and then they FOMO in all the way up, right here, and then they get trapped, and then they get dumped on, okay, by the smart money. All right, so usually this is why schematics like this have been around for so long. Okay, and again, you can read about it right here. Let me continue with my analysis. So all I'm saying is, there's really nothing that has happened in the last, 10 hours or so that we have not seen over the last maybe 10, 15, 20 days, okay? Really, it's just sideways chop trading, all right? Let me look at a bigger time frame and show you guys also what I mean. So on the 6-hour chart, here's sort of what we're seeing right now, okay? We are still basically trapped in the middle of this parallel channel, right? So we've had a touch right there, 3 touches, 4 touches, and now we've had the 5 validation touches. If this does break down, I would expect this to shoot down somewhere around this 6,900 to 7,000 area, which again is the bottom of this channel right here. And also it happens to be one of the more critical levels on the daily chart, like this right here, okay? You can see it, that 7,600 is right there, and 7,200 is really the next big support around this area. And then beyond that, it's this big order block right here before prices jumped off, okay? So anywhere between 7,200 and 6,900 would be my next guess on the daily time frame, okay? So you can see that the 6-hour chart, if it does decide to dump down, because this also looks sort of like, in my opinion, a big bear pennant, right? Big flag pull right here, sideways distribution and tightening price action right there, then it just dumps straight down, okay? This is usually how most bear pennants play out. Not necessarily that all have to do so, but within this bear pennant, obviously we're also seeing some tightening price action where there's a symmetrical triangle being created, right? So if this symmetrical triangle does break out, again, your true level to look out for is the 8,200 to 8,300 area. On BitMEX, these tops right here, as you can see, are somewhere around 82, 8250. Over here on Bitstamp, the tops are around 8350 or so. So I would say, go with the average of those two, maybe like 8,300, 8,325 on most exchanges, okay? If you see those prices starting to break through there, or at least close above this area on a 4-hour time frame, then I would say that this is a good deal. Now it might be time for price action to start breaking through this descending parallel channel, breaking through critical levels of resistance, like this, top of this blue channel, okay? So the real resistance that we've been facing for so long has been 8,050, okay? Anything below 8,300 or 8,050 is really a no trade zone in my opinion, okay? And I mean that as no trade zone, okay? There are larger swing trades at play that I'm working on, and I'll share with you guys in just a second. But first, let me get through, a couple more things, okay? So to sort of contradict and question my own thoughts, here's something that I found that was really interesting, okay? This is by a username Flib, I don't know how to pronounce this, but anyway, here's the Tether market cap right here in the green, all right, and in the blue we have the BTC US dollar price action, all right. Every time Tether has printed some money, you can see that the BTC US dollar market cap has found its way towards the Tether market cap, okay. Now, here's the interesting thing. Tether just printed $150 million yesterday, okay? Again, printing this doesn't mean that it's going to go into effect right away. It just means that they are going to fill future issuance, meaning if there are some big buyers waiting, they may be waiting at a certain point, or they might just do it today, okay? I don't really quite know, but the point is that historically, whenever Tether has printed money, like these times right here, 1, 2, this bottom right here, you have historically seen price come closer to it every single time, okay? And so in this case, because Tether market cap has taken off in the last 24 hours, I guess you could make the argument that price is supposed to, move on up closer to it. I mean, historically it's been true. But again, in terms of technicals, we definitely look like we're going, down before we go up. Now, it could very well be a possibility that we have a quick shakeout to the downside over the next 24 hours, and then we sort of grind back up and then just rip through this resistance all the way up, okay? If we do that, all right, then I would say that this whole thing that's been playing about right here has been potentially a large accumulation, okay? Accumulation, unlike distribution, has a few different things in play. So here's, the automatic rally right here, which would probably be this one right here, okay? Here's a break of the automatic rally right there in phase B, which I would say is this part right here, okay? And then once we're in phase B, you see a big come down in the spring test in phase B, okay? So this is probably the spring test in phase B, okay? I guess you could make the argument that we need to go deeper in terms of the spring test. So in my opinion, I would say that around this area, this is probably where, I'm sorry, where'd it go? This is probably where this is, but more importantly, it should be down here, okay? So if that is truly the spring test, then this next big spring in phase C is supposed to be that big drop that we need to see around 7,200 down to 6,900 or so, okay? Because that spring helps us gain some new liquidity in terms of, catching some new demand, fresh demand, and then we bounce off to the phase D, which is show of strength right here. Last point of support, back up, last point of support, and then rip on through. Okay, so this could very well play out where price sort of plays out like this, dumps down all the way, goes back in a little bit deeper into 6,900, 7,200, and then it kind of rallies like this, and then just rips on through. Okay. So I'm just saying that, while the larger distribution might be at play that I'm showing you, on the smaller time frames, this could also be happening too, okay? Even within this, small little trading channel, you can see something like this at play. It's not perfect, but it is possible, okay? But for now, I would say more signs are leaning towards, being bearish rather than bullish. Okay, so in my opinion, I would say that there's a higher chance that prices go down to 7,200 all the way down to 6,900 before they reach up higher. Okay, just a thought, something to keep in mind. Okay, another thing that I wanted to share is how the CME has been very important in us figuring out exactly where there's been. Let's see where it is. CME gap. I think it's over here. I found this to be very useful. So here's the daily chart in finding the CME gaps. Okay, guys. Every single gap, as you can see in terms of the CME, has been filled. Whether it's this one back here, it's been filled right there. This one over here, it's been filled right there. Okay. This little gap right here, it's been filled right there. This big gap right here eventually got filled over here, okay? And then this gap right here filled right there. This gap right here filled right there. And this last gap filled right there, or I'm sorry, unfilled right there, filled a few days later, okay? Now let's go on the smaller time frames and see what we're missing, all right? This is the unfilled gap right here that we haven't quite seen get filled just yet. Okay, this is anywhere between let's see, something like this. Okay, so you can see that gap is between 7,500 all the way down to about 7,150. Okay, so you could see why if prices do drop, as we've seen gaps be filled, it could come down into this area, which also matches up around our 7,200 all the way down to 6,900 zone that I spoke about earlier. Okay, so there's a lot of factors that are telling you that, okay, we may need another leg down. Doesn't mean that, we need to, right? It just means that trading is about probabilities, okay? If you have more things that are telling you that we're going to go down versus less things that tell you we're going up, it might be wise to trade on the side of probabilities. Even if you're wrong, okay? Even if you're wrong, it's okay. At least you know that you made a wise decision based on data and, informed knowledge, not just, buying in hopes of the price going up or, whatever direction you're hoping. This is actually statistically in your favor to think that prices are actually going to keep on going down a little bit, at least, for the near-term future. Okay, so I hope that helps. Another thing that, I wanted to talk about is, let's see, where is this chart? So here's the big sort of bull flag that we're seeing right here on the daily chart. Okay, one thing that I don't like to see in this daily chart right here is when we tap this bottom right here, as you can see we've moved away from it every time, right? And now we're kind of just grinding sideways. Excuse me. We're just grinding sideways near this top of this ascending channel. So eventually when you grind down sideways near a critical support like this, you're going to break it, okay? It's the same thing with resistance, guys. Over here, right? If you look at resistance right there, that was resistance 0.1 right there. Or actually, it was 0.1 right there, 2, 3, and then look. We moved sideways near resistance and then broke through it. This applies the same way, okay? If you're going to come down near support, okay, and you're just going to grind and sit there, eventually this support is going to break. All right, so this is another reason where you can look at a larger time frame like the daily and say that, okay, this trend line right here has been holding, but the weight that the price is putting on the trend line will eventually break. All right, and then it'll push prices to the levels that we spoke about, 7,200 down to 6,900. All right, weekly chart. I've spoken about this a little bit. Actually, let me check out the daily real quick, and there's a couple interesting things to note on that as well. Here's the 21 EMA right there, and I know I have the 30 somewhere. Let me see. 30's in the pink, the 21 is in the red. Okay, I've stated this before in the Crypto Somnia community. You can see that the 21 and red have been playing really strongly in terms of leading prices up higher and higher through the entire bull run that we've had since March or April. Okay, now we're coming into a very critical juncture where the 21 EMA, which is the red right here, price is unable to close above it successfully on a daily without getting rejected. Okay, it looks like yesterday we sort of did, but just a hair below, and today's daily candle looks like it wants to close above that. Okay, so this could be a positive sign if it does, but if it doesn't, the 30 EMA is right below it, which is around $7,700 or so, which has also been quite supportive of price all the way back from March right here, right? So pink right there, touch, pink right there, touched. Over here, even a few days ago, it touched and bounced off. Okay, so the point is that these EMAs right here are very significant, at least in the daily time frame. All right, and if we look back on the weekly time frame, one thing that's also useful is the 21 EMA through the bull run that we had all through 2017. Okay, so once we broke out of the 2015 bear market, you can see the 21 EMA touched once right here on the weekly, over here, over here, over here, and every few weeks, okay, if you notice, right, price likes to come down to that level, touch it, and tap it, and then move away. Okay, so you can see that it tapped it here, and then 5-10 weeks later, it tapped it again. 5-10 weeks later, it tapped it again. 10-15 weeks later, it tapped it again. Over here again, and then over here, it finally broke on through, and then it became resistance. So now that price is above the 21 EMA on the weekly, what do you think is going to happen? Okay, at some point, this level wants to be, price wants to use this area as support at some point, and get assurance that, okay, well, this EMA, these prices right here are allowing me to use as support, and then I can bounce off it. Okay, currently that price action resides around 62 to 6,300. So if prices break through that 72 to 6,900 that I spoke about, look out for 6,300, guys, or 6,200. Okay, because price could very well, bleed right through that and come to it. Okay, so just something to keep in mind. All right, guys. Let me see if there's any questions. I know, man, the washing machine, I'm sorry, guys. I know it's way back there, but still it's loud as hell. It's actually a dryer. All right, folks. I think I'm going to wrap it up here soon. Let me see. I know there's a few things that I wanted to check out. Here's the LTC chart that we had put up. I want to show you guys this actually, because I want to show you that we put these trades up when we did, and we got into these positions with the timestamp. Okay, here's the LTC chart right here. Okay, LTC shows you that we got in June 9th around 128. Okay, and we allocated about 12.5%. Again, none of this is investment advice. I was just telling people what I was doing. If you followed, I mean, so far you're looking pretty good. So here's LTC right now. Okay, let's see where LTC is. Okay, LTC is around 140. All right, and we got in around 128. Okay, so let's see over here how much of a gain that is. Got in around 128 or so. So right there, you can see that that's about a 10% gain. Okay, so in the last 3 days or so, our LTC position is up 10%. Okay, so you can see clearly that in our community, whenever we do have losers, first of all, we're not afraid to talk about them. Okay, like these right here, 4% losses, right? But we can easily make up all this, right? These are all 5, 10, 5, 2.5, 10% capital losses, but we made up for that, pretty much most of it, in the last 3 days, okay, in LTC. So because this was a 12.5% capital trade. All right, so you can clearly see that even if we have losers, we try to keep them small, but when we have winners, we keep them big, guys. So we're up a good 10%, and I expect LTC to go up maybe around 144, 146, touch the top of this channel, and then come back down again. Okay, I'm fairly confident that it will come back down, and then probably bounce off up towards 180 or 190. One thing I want to tell you guys is be very, very careful in beginning of July, middle of July, because all this right here, this excitement about the halving will play out right here. And this is really the point where prices are going to be dumping. Okay, the halving will be factored in most definitely by beginning of July or middle of July. So you want to be getting out while most retailers are getting in. Okay, never think like a retailer. Always think like smart money, where you want to get out when most people want to FOMO in. All right. So in my case, I will probably be getting out just to be safe end of June, beginning of July. All right. Let me check out one more thing. I know one of our members asked about this right here. Let's see. So here's ADA. Okay. Cardano has been, very weak as of late. It looks like it's coming into something like probably like a ascending triangle, as you can see right there. But again, I probably wouldn't really touch it until it gets past like 1200 or so, just to be safe. Cardano has just been bleeding for so long, guys. You have to allow it to show you some strength before you become a little bit more confident. Don't think that prices can't go any lower, because they really can. Okay, especially given the fact that Cardano is just moving sideways while BTC is in a very particular area where it hasn't quite broken through, Cardano may actually go down further, okay, if BTC breaks down. So don't underestimate how low alts can go, okay? So again, if I were you, I would wait towards 1,200 Satoshis just to be safe, all right? One quick thing I want to show you guys is this yearly chart. I know we're so caught up in the daily price action, the weekly. This is something that's really interesting. Watching BTC year to year, every single year you can see that price has gone up, spectacularly well. All right, every bull market is larger than the previous. Well, comparatively, yes. Okay, but you want to keep this in mind and trade as per your risk tolerance, as per your capital. Don't just think that it's going to keep on just going up and giving you 5,000%. And also try not to buy at the top, okay? If you don't know how to do that, come join our Cryptosomnia community, guys. We can definitely help with that, okay? I would say aside from that, what is the main EMA in the daily and weekly? Only Crypto asked. So Only Crypto, I would say that the smaller time for, or I'm sorry, the more local price action, if you want to catch it, is probably in the 21 weekly. Even on the daily, you can do that. Most traders will often use the 50, 100, and 200. The 200 and the 400 are very useful on the daily chart because they show you exactly the turn of big bull prices and the market shifting towards a bull market versus a bear. Okay. So keep those in mind, all right? Other than that, I think I've covered everything that I want to cover the CME gap, cover the Tether debacle, and also one thing I think I wanted to talk about is just this, where'd it go? I think it's over here. So here on the daily chart, one thing I'm not liking is this, MACD flip hasn't quite stopped in terms of, the MACD coming closer and closer, okay? This is another reason why I feel still a little bit more bearish because we've seen more things that are showing us more bearish signs than bullish. Volume is also dropping off right near the bottom of this, bear flag, which is again not a good sign. You want to see volume picking up to push through this resistance, but it's not. The RSI is right near neutral territory, so that doesn't really matter. But the histogram, for the most part, is just moving sideways. It's not getting deeper and deeper, so that's a positive sign. But for the most part, the MACD is really not looking good. Okay. So again, another reason why I don't feel quite as much bullish just yet. All right, I think that wraps it up, folks. I hope you enjoyed this analysis. Please give us a thumbs up. Let me know your thoughts. Let me know what you're thinking, and come join the Cryptosomnia community. There's a Discord link right in this description that you see, okay? And as you can see, guys, even in bearish markets like this, we got into a nice LTC trade around 128. LTC is currently at 140, so we're up a nice 10-11%. All right, but again, if you are thinking about getting in, I would probably be getting out beginning of July or end of June. Okay, you do not want to be trapped when the smart money is actually selling. All right, that wraps it up, folks. Come join Cryptosomniac. Give us a thumbs up. Thank you for watching. Cheers. All right.